Hey guys, it's Wayne Scully with W Scully CPAPC. Just a little bit before I get into this video, just want to talk a bit about the weather. I'm in New York City and it's probably about 60 something degrees right now. Um, Thus, I'm wearing my sweater, right? So we're close to summer, but we're still kind of cool, which is fine by me. It's great weather to sleep in. Anyway, I was saying before, I'm Wayne Scully with W Scully CPPC, and I'm a tax and business strategist. Um, my focus is providing solutions to landlords, flippers, and real estate pros in the New York tri-state area. And my firm provides tax compliance, business consulting, and high-value tax plan strategies to save clients thousands of dollars. Now, here at W Scully CPAPC, we say taxing you is their job, saving you is ours, or we give you $100. And I really mean that. So far, I haven't had to give $100 away, which is great. That means I'm doing a good job. I use it to hold myself accountable, right? Anyway, today I want to talk to you about financial statements. In particular, I want to talk to you about the P&L, profit and loss. It's one of the most important statements, the most important documents that you can put together through your business. And really, um, it tells a story. It tells a story about your business, about your inflows and your outflows, what's coming in, what's going out, how it's coming in, how is it going out, and so forth. Right. This information, obviously, you can have it for past and present, and you can look at it from a future standpoint. And it's really important to pay attention to what's happening in your P&L, and that's going to help you with your business to make better decisions. I just want to go again. I'm not going to spend a lot of time with you on this. Maybe under 5 minutes is my goal to talk a little bit about this. I'm not going to go into details, obviously. Just want to give you scratch the surface, give you something to think about. So what's the basic picture? Again, inflows and outflows from your business are two in and out of your business, right? And it shows areas where you could be weak, areas where you have strengths, maybe products that are selling, products are not selling so well, services are doing great, some that are not, and so it kind of gives you that kind of insight into your business, right? And depending on what type of company you are, sometimes the P&L is a required statement if you're traded on the stock market, you're regulated by the SEC. If you're a privately held company, it's definitely good, as I said before, to help you make business decisions. So lenders also look at this, right? Lenders look at this statement because they want to know your ability to take on more debt, all right? Your ability to pay the debt, right? To service the debt. So they're going to look at your how high leveraged you are, and how much you're paying out, out of your business, and how much your business can afford to use to fund or pay back a loan, right? And so there's some common things, some common trends you want to look for when you're looking at a P&L, some common ratios. Ratio analysis is really huge. And for those management accountants out there, shout out to y'all. I mean, this is huge, right? Huge stuff to help your business or help any business, in fact. One of the basic ratios you want to look at is your year-to-year comparison. How would you do in 2021 versus 2020? Because remember, just so you know, P&L is at a point in time. It's at a point in time, right? So how well were you doing this year, last year, this time? If you're doing better than last year, this time, that's a good indication that you're growing, right? You're selling something that's great. You're selling something that's liked in the marketplace, and you should probably keep doing that, right? It can show you where things are not doing so well. Maybe you need to scrap that item or that service, and sell more of the things that are actually bringing money into the business, right? So that's your year-to-year comparison. Trends, as I said before, looking at your revenues and whether or not they're being outpaced by expenses, right? Again, that's not an indicator that maybe you're not going the right direction. Maybe you need to, cut a particular product, or maybe you need to cut some costs that support that product, and so forth. So those are good indicators, or good ratios or good areas or aspects of the P&L to look at to make certain determinations from a management standpoint. Projections, cash flow projections, look at your sources of income and if they're sustainable, right? Your direct costs from your revenues gives you your gross margin, and looking at that from year to year will determine how your cash flow is likely to do in the near term. As I said before, expenses, right? Looking at your expenses, the type of expense that you're incurring, and how that helps to grow your business. Because yes, in fact, we may not like to pay expenses, but that's what fuels what we do, right? It's like a continuum. You have your revenues, and then they're eaten up by your expenses, which then creates new revenues, and you just keep cycling that. You keep cycling that, right? So you want to look at the type of expenses you're incurring and seeing how well those expenses kind of help to fuel your business, or paying those expenses help to fuel your business to help you grow, right? And hey, by the way, the IRS likes to look at your P&L if you're a business that's well, if you're in business, you have to provide a P&L to them at the baseline. At a baseline, you have to provide a P&L, right? Whether you're filing a tax return or even if you have tax trouble, the IRS wants to see how your business is doing, because they need to know, first of all, if it's a tax, or if you're preparing a return, they want to know the inflows and outflows as well to see if it makes sense to them, right? That could be a basis for them to audit you, right? And also on the resolution side, the tax problem solving side or tax resolution side, they may look at those expenses and income to see how well you can pay them. Or if you're making an argument that you can't pay them, they'll make a determination based on what's on your P&L partly. So there you go, folks. I'm not going to go into a lot of detail into this. I promise to spend not more than 5 minutes on this. I think I've probably gone close to that, but if I have, I apologize, but not intentional. But there's a lot of stuff to go through when it comes to P&L, and I'll keep looking at this stuff. I'll keep talking to you about it in the near future. But for now, that's it. Thank you for watching, and please like and share, subscribe to my channel to learn more. In the meantime, I'm Wayne Scully. I'm with W. Scully CPA PC. Again, taxing you is their job, saving you is ours, or we give you $100. Talk to you soon. Bye.